Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 23rd of May and we have Charu Chanana, market strategist from Saxo Markets, with us today. Charu, as always on the Tuesday, great to have you on the show.
Good afternoon, Brian. Great to be back.
Now, Charu, before we get your insights, I want to take a look and see how markets across the region have performed in the first half of the day. We start, however, with cryptocurrencies first, and Bitcoin is at 27,359. It's up 2.48%. Ethereum is at 1,856. It's up 2.97%. Now, looking across the regional markets, we start where you're at, Charu. The Straits Times Index is up 0.35%. Bursa Malaysia is down 0.21%. Shanghai is down 0.63%. The ASX All Ordinaries is up 0.11%. The Nikkei is down 0.54%. The Hang Seng is down 0.69%. But rounding up the numbers, we've got the Kospi, which is up 0.53%. Charo, your views on market performance in the first half of the day?
I think, Brian, a lot of this is really just reflecting the overhang that we have from those debt ceiling talks in the US, where it seems like, the discussions are not making any substantial headways in any direction. I mean, talks are not really breaking down, like, some of the hints that we got on Friday. We are somewhat better from that, but we are still not at a point of getting a deal still, despite Biden having flown back from Japan to the US and having those discussions again with McCarthy. So I think that's something we really need to watch, and how soon can we get a deal here, because also remember that into the weekend the US is actually going into a Memorial Day holiday, so it's going to be a long weekend for them, and the meetings will only probably convene next week on Tuesday, which is the 30th of May, and extremely close to that X date of June 1, which Janet Yellen has been saying that it is the hard deadline when the US will actually run out of cash to meet its obligations. So I think very critical time here. Of course, investors are a little bit worried about how these talks will shape up and what kind of a deal we can get from it.
And also, one of the key things is there's a lot of other moving parts, isn't it? This all impacts liquidity. And liquidity is already an issue in the US as the banks are starting to be more conservative in their lending. So, this is going to potentially have quite a multiplier effect.
Absolutely. That's something that I think a risk that investors are not really pricing in at the moment. You're absolutely right. The banking sector concerns. And remember, the Fed is already doing quantitative tightening as well. Now, once we get past that point of a deal in debt ceiling, what really happens is that the Treasury needs to kind of restore the cash reserves that it keeps with the Fed, which are usually of the tune of $500 to $600 billion, and they are right now running at about $30 billion. So that kind of reserves have to be restored. For that, the Treasury is going to issue bonds, and that means a lot of money is going to be sucked out of the financial system, and it is going to be placed in the Federal Reserve, which is outside of the financial system. So certainly, and investors, looking at what equity markets are doing this, looking at where the VIX is, the volatility index, I don't see that kind of caution in equity investors as of now.
Okay, now I want to take a slightly different take and look at consumer stocks and earnings. What are your thoughts on that, and what is the sector earnings signaling us?
So I think that's really one of the big reads that we need to kind of take from the earnings season that's just coming to a close now. And across the board, if you look at Walmart, if you look at Target, Nike, you look at Foot Locker, all of those companies, the consumer sector companies, are actually reducing their guidance for the full year, and they have highlighted slower consumer spending as one of the key factors underpinning that lower guidance. So I think that's a huge point, because so far we've been talking about the US economy being resilient because consumers have enough savings. Now it does appear that consumers are starting to run out of those savings, or at least trying to pull back in light of maybe the employment situation getting worse or the economic momentum getting slower from here. So I think we really need to kind of watch the labor market indicators from here, especially I think jobless claims, continuing claims. That's something that the US reports every week. And if the unemployment rate kind of starts to move further up from here, we're about 3.4% now. Anything close to 4% is when the markets will really get jittery about this consumer situation again. But again, for investors, that might be too late to hedge your portfolios against the risk of a recession. So I think taking cues from what's happening right now in the consumer companies and how they've reported and guided for the rest of the year, I think portfolios should start to kind of get ready for that kind of a recession risk to come.
Okay, final question, Charu, and it's closer to home for us because that's a different signal altogether. Reserve Bank of New Zealand is going to be uh, uh, announcing their rates expectations, whether up or down. It has been on an uptrend. Bank of New Zealand. What are your thoughts in terms of what is the market expectations around that?
So, yeah, I think the market is still expecting the Reserve Bank of New Zealand to hike by another 25 basis points tomorrow. Well, while that is more or less, a given, I would say at this point, given that this hiked by 50 basis points last time, and inflation is still above target. I think the key thing to watch would be the forward guidance. Do they still keep the door open for more rate hikes? I think there is some scope for them to do that, because the growth has got a big boost because of the budget that was announced. I think it was last week, and migration is also picking up. So overall, it does seem like growth is still on a stronger footing, whereas inflation, like I hinted, that it's still above expectations. We are looking at inflation expectations getting a little bit lower for the second quarter, but if you look at long-term inflation expectations, they are still anchored quite high. And if migration
Okay.
picks up, if growth is still strong, then inflation will still remain a bit of a worry for the RBNZ. Markets are expecting the rates to reach about 6%, 5.75 to 6% kind of levels by the middle of the year, by July or August, I would say. So I think if they do keep that hawkish commentary still intact, I think Kiwi has some more room to, kind of gauge in some more gains. But of course, the scope for unwinding of Kiwi from the time that the RBNZ signals a pause is also pretty significant because of the kind of gains it has seen, since it's run up from the lows.
Now, Charu, as always, thank you for your insights. Thanks for coming on the show this Tuesday.
It's a pleasure, Brian.
Now, we've been speaking to Charu Chanana, market strategist from Saxo Markets, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This interview will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.